Cathie Wood from ARK Invest is back on CNBC. She said that while they started selling Tesla stock last year in a $300 to $400 range, they have been consistently buying Tesla this year as it's fallen to $175. This is in contrast to investors who've been selling Tesla to move to other Mag 7 stocks, primarily NVIDIA. Cathie remains very bullish on Tesla and pushed out her stock target by a year to 2028, but now is forecasting a number higher than her previous price target of $2,000. She believes Tesla will 10x by 2028 as autonomous driving is now in full swing. Today, we're going to watch video of her explaining how Tesla is addressing 3 of the 5 major disruptive growth waves. We've got Jeff Lutz joining us, and Jeff is a previous chief supply chain expert servicing or helping with many of the Fortune 100 companies in the past. Welcome, Jeff.
Great to be with you.
Let's watch this video of Cathie Wood. We're going to watch the first 3 minutes and listen to her talk about Tesla and her price targets. And then I've got slides to show about how she thinks about disruptive growth industries and so forth. So let's start with this.
Why do you still like Tesla, considering all of the challenges in the EV space and also what many critics would say are disappointing fundamentals?
So yes, you're right. We were selling last year as it was in the $300 to $400 range. It's back to $175. And this is what portfolio managers do. We have a 5-year investment time horizon for Tesla, and our price expectations from here, I mean, we see roughly a 7 to 10-fold increase. I know we're in the process of revising our model, so I'm not at liberty to give you the new number. But
would that new number be higher or lower than 2,000?
Well, we're pushing it out a year, and therefore it will be higher because the autonomous taxi platform opportunity will be in full force, we think, and we believe that Tesla will get the lion's share of that market here in the U.S., if not elsewhere. Autonomous taxi platforms are SaaS models. Tesla's current gross margin is, well, it's in the teens right now because it's been cutting prices, but we think normalized, the EV margin is in the 30% range. SaaS margins are in the 80% range. Most analysts focusing on this stock have nothing in their models, or very little, for autonomous. Our confidence that autonomous is going to happen has increased because it has happened. We see Waymo successful. We see a lot of success and commercial success, that is, in China. It can be done. We think Tesla will launch a national service. And Tesla, this is where AI comes in. Tesla has orders of magnitude more data than all of the other auto and tech companies going after this market combined. And what's important about that is that it has corner cases that nobody else has. Rare occurrences on the roads that it has recorded and it is prepared for, but others aren't.
Cathie,
they just don't have.
I just want to jump in. It's kind of like a running joke with the Tesla community, because Elon Musk says every year we're going to have this autonomous driving technology, and every year since he started saying it, 2017, 2018, it has failed to materialize. Why are you so confident it's going to happen in the near future?
Well, because it has happened, as I just said, and so it's not if, it is when. That's the most important reason. Interestingly, in his last conference call, Tesla's last conference call, Elon said, yeah, I know I've been wrong about it, so I'm not even going to make a projection. I actually thought that was good, and maybe it has a better shot now. And we're looking at some of their hiring and their job postings and seeing rumblings in different cities that they're starting to get ready.
Hey, Cathie.
Still very much bullish on autonomous. What's your take on what you just said?
It'll be interesting to see, Herbert, when she publishes her price target and the components of the auto business, the software as a service, the autonomy piece, and even when humanoid robots start entering into that piece as well. And it looks like she's increased. It looks like she updates her kind of a rolling 5-year forecast, and then she's increasing the target. So it'll be interesting to see how she values each of those segments. I mean, if you look at Tesla right now, Tesla is currently somewhat range bound. We've got the compensation issue with Elon, the most important person in the company. That's a bit of an overhang. And then you've got this kind of very near term, quarter to quarter unit, is it growing or not? Question that needs to be answered. There's some, interesting. There's some interesting data points that are occurring this quarter relative to pricing, somewhat stabilizing, even increasing this month in a couple of geographies where there were price reductions in the first month of the quarter. So it seems like it's starting to stabilize a bit relative to the COGS decline. But when you look at, she's looking at a 5-year horizon. So people see her buying and selling the stock, buying and selling, like what's going on. And it looks like what they have is they're building a core position, and it looks like they are continuing to trade it, where they were accumulating, I think at the end of 22 and beginning of 23 in the 140 range. And then they were selling it up at 250 to 300. So I do think she's got a pretty decent history with the stock. And so they see more of a basically from here to 5 years out, about a 10x improvement on it. And they see it really on the backs of autonomy. So you've really got to start looking through the lens of V12 and saying, like, is this starting to display characteristics of something that could be fully autonomous? I think the answer is it starting to display those characteristics? Yes. Do we need the statistics behind it that say when you do, can you do 1,000 perfect drives in a row? These are the kind of things, I made that number up, by the way, but, can we get the interventions to a point and the stability to a point where it could be a robotaxi? I think those questions still remain to be answered, and they still need to get V12 out to a wider audience for further testing. But we're seeing some mixed information, a lot of it very good in terms of the capability of the new release. The comment she made about the robo-taxis and scalability was very interesting to me, because I think from an architecture perspective, the way it's actually block designed and the unit economics that go behind each of those decisions, that there actually is only one player that's properly positioned in the world, and that's Tesla. And if you look at the marginal cost and the hardware cost per vehicle, they essentially can get that hardware cost to approach near zero. And these are the kind of things you look at when you're building out a hardware platform on like a 5 to 10 year horizon. You look at, the entry and the barrier cost to get this going. So you have the client side, you have the infrastructure side, and they're the only player that's really trying to build both sides of that up. Now they're working their own chip on the client side, on the vehicle, 6 million robots out there capturing more drive data. I think they capture, many orders of magnitude of data per day than everybody else combined. But then you look at the economics of the solution, the economics work. Tesla vehicles are basically, arguably $1,000 to $1,500 more expensive per vehicle to equip all of them with robotaxi capability. And some of these other players that are perceived to be ahead, running small localized robotaxi services in very small geographies, those cars fully loaded are, maybe many tens of thousands, if not hundreds of thousands of dollars, when you actually take the economics of that operation of a previously built car to rebuild it, and then the volume of them that are actually out in service, and you look at the fixed cost to support all that. These things are probably hundreds, I would imagine they're hundreds of thousands of dollars each, certainly many, many tens of thousands of dollars more than a Tesla. And those economics don't scale. And I think that's what people need to understand, is that there's a scalable model with Tesla and what they're building. And then there's something that's at least questionable, if not outright won't work. And we've already seen the troubles with Cruise. And we also found out that there was a lot of intervention. There was a lot of manual operations in the background as well. My experience in China has been somewhat similar. It's like what you see in terms of what's in front of your eyes versus what's behind the actual operation can sometimes be two different things in terms of, how autonomous are these systems? How autonomous are they really in operation? So when you put all that together, I think, if you look at this AI vision only model, it looks like it's the only economically scalable model, and it looks like it's going to work everywhere. That's the other thing. It doesn't look like you're going to have all these training costs to bring up each geography. So, and maybe that can all work out. That may all work out for some of these other companies, but in the end, it's not clear to me that they've actually architected something that's economically viable. So that's why when Cathie says that they're going to capture most of the market, they're probably going to have the best solution from a performance perspective, but the economics are going to allow them to put vehicles everywhere. And I think that piece of it and the scalability of it's critical. Finally, so Tesla's been running full self-driving beta in North America exclusively. They have testers running it in other geographies, Tesla, that work for Tesla, but they haven't released in those other geographies. So I think the next unlock of FSD revenue and autonomous revenue, software as a service revenue for the company is not the robotaxi network. I believe it's going to be getting full self-driving. The first step will be getting full self-driving to a point where it's beyond level 2 in North America. And I'm not saying this has to be serial. Then release. I think when V12 is stable, they will do targeted releases in Europe and in China. I think they're already getting ready for that when you look at some of the hiring that we see online. And I think that's the first stage. And then once those stages are completed, I think other people see that Tesla's now going wide with this solution and it's working very well. I believe the second stage of that unlock of autonomy revenue is going to be partnerships. I think the third stage is going to be the actual robotaxi network. So I believe it's going to come in those three stages.
Thank you so much, Jeff. So I'm just trying to think about how other people react to Cathie and these predictions that these institutional analysts have. And what I find that people are forgetting a lot is that it's about probabilities. So I think it's an absolute mistake to say it's guaranteed that robotaxi will happen in 5 years. I don't think that that's what she's saying, but it's also wrong to say, and I've heard many people say this, robotaxi will never happen. The way you described it was great, right? Because what you want to put your bet on the company that has the ability to reduce or increase the probability, reduce the risk. So as you went down that list, right, the hardware, the AI, the economics, the beta, the fact that it doesn't have to get to robotaxi, it can just go to FSD first. The way that it's, when they roll this out, it could be national. These all kind of increase the probability, reduce the risk that they are going to have the chance to get there before others. And the reason why I think it's worth the bet is because the pot at the end of the rainbow is massive. If you win this space, and not even have to win it, just more than just a regular car. Now you have an intelligent car. It can be safer than others. It can eventually be a real robotaxi. It's worth the probability that it's going to happen. So let's get to the second part here, which is she talks about the 3 disruptive technologies out of 5. I'm going to share some of her web pages first, and then we'll listen to her talk about it. So here we've got, she talks about, ARK Invest is all about looking for these disruptive innovations and markets. And these are the 5 that she's identified that they think that are very important for, right now, what's happening right now in the next 5-10 years. You got the public blockchains, multi-omics sequencing, which is programmable biology and precision therapies. You got artificial intelligence, you got energy storage and robotics. And what she's saying is that Tesla uniquely has a play with all 3 of these, 3 of the 5. And so they really are, again, high probability that they will succeed. And if they do succeed in any of these, it will be massive success. Here's our explanation of how these disruptive innovations have impacted the society and markets. You got the steam engine, railways, combustion engines, telephone, automobile, electricity, computers in 1980, internet in 2000. Now you've got energy storage, artificial intelligence, robotics, genome sequencing, and blockchain. And so these are the 5 that she's putting the bet on. and they're going to succeed like crazy. And for her to choose what are the important disruptive innovations, she looks at 3 criteria. The first one is that particular innovation has to show a cost decline that's going to be massive reduction. Okay, it's got to have a dramatic cost decline, the Wright's law to better send the scope of the transformative technology. We're seeing that now with electric vehicles. We're going to see that soon with AI. And we're going to see that with robotics. But it has to also cut across sectors and geography. The addressable market is way more than just one specific, industry or market. And then it's got to serve as a platform for additional innovations as well. So that's how they've decided that. Let's listen to her talk about it, and then you can react to all of this together.
And I know I brought up this with you before, but I think back to you and my first interview back in May of 2014, so almost 10 years ago. But you brought up Elon Musk when he wasn't a household name or what his company was doing, and you likened him to Thomas Edison. And I guess what I want to ask you, this individual, you talk with him, you followed him obviously for a long time. Do you ever feel, do you feel that way still about him in terms of likening to someone like Thomas Edison? And how do you find clarity and feel comfort in some of the questionable and controversial things that Elon comments on or that he says?
Yes. Well, we're focused on the technology, and as is he. He is the inventor of our age, and this age is a very special age because the 5 major innovation platforms around which we have centered our research are converging, and 3 of them he is helping to converge. This autonomous taxi platform opportunity is the convergence of robotics. Autonomous vehicles are robots. Energy storage, they will be electric.
Right.
And artificial intelligence, where those are 3 separate S-curves feeding each other, and should lead to super exponential growth. He has understood this idea that technologies are going to converge with one another. And that is the way he's been thinking. He's first principles research. Just because something's been done one way for a very long time, think autos, doesn't mean it's going to remain that way. And that's why he's going to win.
Do you ever feel, though, that he gets distracted or can be too much? Yeah.
He is so laser focused on technology, and he, in the case of Tesla, the electric vehicle side, that is on automatic pilot. They are just scaling, and what he is doing is becoming, the manufacturer of factories. He's trying to figure out how to automate and continue to drive down the costs there. His focus is on autonomous now, certainly, and of course you can say on X he's distracted, but he's really more focused on the innovation. How can I go back to the future where I started, which was in the payments app space, sold to PayPal? How can I turn this into not only a payments app, but an everything app? And I think he's hard at work doing that in ways that we don't know yet.
Wow, I really like that bit at the end there, because it's a reminder that not only is Tesla doing AI, robotics, energy, and all the other things, but they converge. They converge. And so if you are just doing one thing, robots, and you need to partner with somebody else with artificial intelligence, but you don't have the batteries, and vice versa with the with AI, if you don't have the energy storage, that's going to be one of the major rate limiting steps for data warehouses, that massive data warehouses that you'll need. First, it's going to be transformers next year, and then it's going to be electricity the following year. And many of these companies, I mean, I think we've started to hear Microsoft and others starting to buy up nuclear power plants and others because they need energy. Yeah, just tell me what you're thinking. This was really cool. I love this conversation there.
Yeah, when children, over the next 10 years crack open a history book, they're going to start seeing the early, and he's still going to be working, Elon. I imagine he's still going to be inventing and working, but you're going to start to see the early first and second decades documented of his work in terms of inventing kind of modern private space travel at a cost structure that would actually allow it to scale, and then inventing the scalable, EV platform that spurred an entire industry and changed the entire automobile industry. So that's how he's going to be reflected, I believe, properly in history books. And as time passes, it's going to even be more, I think, endearing to him. You're not going to see, what tweet he sent on, February 24th. That's not going to be in there. It's going to be these major accomplishments that he's done to really transform travel, transportation, energy storage. You can go on and on. Potentially, maybe with Neuralink. There's so many different businesses that. So, from a history perspective, and the question of, is he kind of our Edison of our age? The answer is he's actually going to have his own section in history in terms of how he's looked upon. He's going to be looked upon, at the similar stature of those inventors. So I think it's important to put that in context, and that will become clearer in time. And there's things that we've even, there's things that have been a part of my history. I'm not comparing myself anywhere with respect to this, but just things I've done over a couple of decades. When I look back, okay, well, that's how the modern smartphones started. That's how they were assembled. It's how they were manufactured. And there's a group of people that figured some of these things out. Well, he figured out modern space travel. He figured out the EV auto industry, and so it's actually scalable. And then so many other industries to come. Potentially, he's going to have a huge mark on AI, maybe one of the largest. And then, of course, Neuralink and so forth. So I think the historical context piece is really important. I think the three industries around energy storage and AI, I think those things working together is a critical thing. And the fact that they're developed in a way where they're actually scalable. And that's where Tesla goes and looks at each of the things each of the industries that they're playing in, and they look out. They don't look out a year. They don't look out 2 years. They look at what are the bottlenecks going to be in this over the short-term time frame, all the way out to 5 to 10 years, and then they start working on them and they start figuring them out, and that's how you get to where you are today with Tesla. So if you look at Tesla, when they IPO'd, they said, well, look, we have to ramp EVs. We need scalable batteries that don't cost, thousands of dollars per kilowatt hours. So we're going to have to help this industry scale, because we're going to have the energy consumption for these vehicles that equate to the entire, lithium ion market today. So then they went in and figured that out and worked with the JV to get that started. And now they're developing their own batteries, and now they're in mass production with their own solution. You can go on and on in terms of those bottlenecks they figured out. Should we partner with manufacturing, or should we go vertically integrated? They took the auto model. They went from the current industry auto model today is 80% outsourced, 20% assembly insourced. And they flipped it on its head and said, in order for this to scale, you've got to be highly vertically integrated for this to happen. So they basically developed that themselves. And there's so many other examples. It could be the lithium refinery that they're working on, but there's so many other examples of them looking ahead and saying, what are the bottlenecks going to be in this industry, both from a supply perspective, but also there are economic bottlenecks that you have to uncork and figure out. And that would have probably been with the electric motors, inverters, battery systems, all those things that they basically said, we're going to insource these things. We're going to do them better than anyone else. We're going to take that profit margin away, and we're going to give that back to consumers so we can actually get these at a price point. So, yeah, I mean, I think to sum it up, he's going to be in his own class of inventors. He's going to be up there with some of the biggest, I think, of all time. And I think Tesla is as a business, it's constructed in a way where they're not just single flat businesses with very low trajectories and very small time frames. They have multi-decade time frames on them, and they focus from the end solution to the consumer all the way back to the core atom of whatever's needed to develop that industry and make it to what it needs to be. I can go into more examples, including with what they did with their own inference chip. Said, look, this is going to be a bottleneck. Everybody can't be buying their inference solutions from NVIDIA. we got to develop our own. We can do it more specialized. We can take the costs down, and we don't have to pay NVIDIA 70% margin. So example after example, and that's a very unique person, and it's a very unique leader that can, most don't recognize it. Most don't recognize what those bottlenecks are going to be in the future. Very few do recognize it. The very small percentage that recognize it actually can't do much about it. Like, they don't have the skill sets and capability. And then you put Elon into that smaller box of, he sees these bottlenecks many years in advance, and he knows how to actually action it and do it. And I think that's where we are today. And I think it's very fitting with that, that clip with Cathie. That was my summary of it.
I love this table here, this chart here, this graph. If we agree with it, but look at this, right? These are the things that are going to have even more impact than all the things that's happened in the past. If you agree with it, energy storage, right? Abundant future.
Yep.
You got your AI, you got your robotics, and eventually genome sequencing and health and blockchain. And it's going to be an amazing future. Tesla's right in the middle of all of this. And if things go right and things look like they are going to go right, that's why we're liking Tesla. All right.
Yeah, good stuff.
Thank you so much, Jeff. Appreciate your thoughts there and input. Follow Jeff on X at the Jeff Lutz. Talk to you soon.
Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.